Hey, what's going on, guys? Today I want to talk about a put credit spread that I opened earlier today on IBIT. So IBIT is a Bitcoin spot ETF managed by iShares. Very liquid ETF out there that people buy and sell. And then also it's a very liquid option market as well. So let's go ahead and dive into this particular trade and my thesis on it. So Robinhood, this is the platform I am using. I'm currently selling a put credit spread. It's a $2 wide spread. 51.50 minus 49.50 is $2 wide, or roughly $200 worth of collateral. This is a bullish play. It is assuming that IBIT will finish above 51.5. That is my short position. And then the 49.5 is the insurance. So typically you could sell a cash secured put, and that is what 51.5 is. But by buying this 49.5, the capital required for this trade is only $200 minus the credit received. So I think I received $15. So nothing crazy here, but it is a short duration trade, and I'm planning on either rolling it or exiting it, several days before the expiration here. So scrolling down, currently it's worth $9. It's expiring this Friday. Gonna hope to get 75% of the credit, so hoping to get out close to $5. We will see. Hopefully, everything stays bullish the rest of the week and crypto doesn't drop a whole lot. But the risk, like I talked about with this spread or with this trade, is this. This is our biggest risk, and managing that leg of this spread is the most important. Since I sold it, that means there's an option buyer out there that can exercise it at any point as soon as it goes in the money. So it's not in the money yet, but if it does go in the money, they have that right, and that is something I will have to manage appropriately. So this type of strategy, like I mentioned, it's a bullish strategy. In order to be profitable at expiration, IBIT has to finish above 51.5, but I never let spreads go all the way to expiration just because of the risk of, it potentially ending up somewhere in between here. And then that could be a very dangerous situation if you don't have the capital, required in order to fulfill this option. So, like I talked about, hoping to get out roughly around $5. So we have another $5 of credit we're looking to receive from this trade. But once again, coming over to IBIT, it did get pretty close to 51.50 pre-market earlier. Maybe it was yesterday, which is down 11%. But we'll see. Time will tell. We'll see how things kind of shake out the rest of the week. And we'll end up seeing if this is a profitable trade or not. But yeah, guys, that is it for today's video. Once again, I wanted to just show some perspective on this position that I have open on IBIT. Collecting $15 on $200 worth of risk. It's not too bad, roughly 7.5% in a couple of days here. But yeah, let me know your thoughts down below. Do you like put credit spreads? Do you sell cash secured puts? Are you a fan of these spot ETFs? I've been making some videos on crypto and, that whole ideology of, a finite money supply or, finite, asset versus, the dollar or stocks or, pretty much something else that people can't manipulate and create more of or print more of. Bitcoin is a fixed supply. And yeah, that's IBIT as a play. You can buy Bitcoin on the stock market in today's age, which is really cool. That they passed that last year, and kind of, gave more people access to cryptocurrency via these spot ETFs. But that's going to be it for this video. Let me know your thoughts down below. Do you like crypto? 2, do you like Bitcoin? And 3, do you like implementing these types of option strategies to create income, to create growth on your portfolio? Would love to hear your thoughts down below. Thanks.